In today's video, I'm going to show you a better way to keep track of trend. Most folks use moving averages. I think moving averages are messy. They leave a lot of room for interpretation and as a result, a lot of room for discretion. You're left guessing, what is the trend currently doing? Is this a crossover you should be looking at for the bullish side? Is this a false breakout? Which way should you be paying attention? As you get into smaller time frame charts, this gets even messier in my opinion. You just have a bunch of lines drawn on your chart. That's where we built the Market Pulse indicator. It's a free indicator, and I think it's a much better substitute for not just moving averages, but for also recognizing trend and staying on the right side of it. There's two components of the Market Pulse indicator. The first is this label, and the second is this line. The label very clearly tells you which one of the four market stages we're in. So inside of Raytheon, for example, very clearly telling us we're in this market stage of acceleration. That's where the bulls are in control, and you'll see the market pulse line is green when we're in the stage of acceleration. It's also easy to tell how long we've been in this stage of acceleration. That's been ever since the line turned green back in May of this year. So now we've answered the question, what market stage we're in, how long have we been in this market stage? You also have one very clear line that you're looking at for pullbacks. There's not a bunch of lines like you get with moving averages where you're left guessing, is it the 8 EMA, the 21 EMA, the 34 EMA, which one do you pay attention to? No, none of that. Instead, you have one very simple line, and the beauty of the market pulse is it also accounts for volume. Moving averages only look at price action. The market pulse looks at both price and volume, which I think gives you the best of both worlds. Now with the market pulse, it's also easy to spot pullback opportunities. So here, for example, you have the first pullback, the second pullback, the third pullback, the fourth pullback, and what we had today, which is the fifth pullback inside of Raytheon. Now with this fifth pullback, we also had volatility, and that's where Raytheon appeared on our radar. If we come into the stock Volatility Box live scanner, Raytheon was one of those symbols which appeared today, which also had a bullish trend supporting it. So we had a sell-off inside of Raytheon. A few other stocks were DoorDash, Oracle, etc. But Raytheon stood out because we had the trend on our side as well. Now, if I come into the 5-minute time frame chart here so you can see intraday volatility, here's what Raytheon looked like. Raytheon started the morning with a sell-off, and when we had this sell-off, once price hits our volatility box models, that's when it appears on the live scanner. So once Raytheon breaches our volatility box models, you'll see that now all of a sudden we have Raytheon's trend telling us that, hey, we are now looking for reasons to try and get long. This is off of the aggressive volatility box models. Now, the key question is, when do you actually try and get long? There's lots of different triggers you can use. I've talked about overbought, oversold confirmation signals with the edge signals indicator. That's if you like indicators like the RSI. But if you like trend indicators, if you like to wait for this trend to switch, I'll show you in this video how the market pulse is yet another way that you can use a very clean trigger to try and get long or short whenever that trend reverses after prices breached our volatility box models, telling you you now have a volatility edge. So if you just take a step back, think about that for a second. Today, Raytheon sold off on the daily time frame. If we start with that, we very clearly know headed into today all the way up from May, we're in a market stage of acceleration. So bulls in control. Now Raytheon appears with intraday volatility on our stock volatility box live scanner. It appears for a long side setup, all telling you that in this trend, which is already long, where the bulls are in control, you're getting a sale, an opportunity to enter at a discount. Now we have very clear levels that we're interested in entering this trade in as well. Now, say you're waiting for the trend switch. All the way up until this morning, about 10 a.m. Pacific, shortly after the lunchtime hour, you'll see that the trend up until that point was red. Market stage of deceleration, very clearly telling you the bears are in control. You'll see that red starts to sprinkle off a little bit as we get towards the tail end of that lunchtime hour. And then as soon as the lunchtime hour ends, you'll see this market pulse switches to green. And price is actually quite close to the market pulse line at the time of entry. So all of this is where the trend reversal takes place. We're starting to see the preceding trend, in this case, the decelerating trend, starting to lose steam. We see that with it going from a solid red to gray to little bits of red. It's starting to flash on and off. And then we see the bulls take over with the market pulse transitioning to green. Now, as soon as that happens, take a look at if trend ever looked back from that point. For the intraday trend, as soon as the market pulse turned green, Raytheon rallied all the way up to the other side's volatility box models. That's a really nice trade here. That's nearly a 1.3% move in less than about 2 hours until the market's actually closed. If you zoom in to a 2-minute time frame chart, you'll be able to see these trend switches in a little bit more granular detail. Same idea, market pulse red, very clearly selling off. We see it starting to lose steam when the market pulse transitions to gray, back to red, little snippets, and then we see the bulls take over. As soon as the bulls take over, no looking back. Now, I will say on this 2-minute chart today, Raytheon looked very clean even on the market pulse with the 2-minute. But typically on the 2-minute here, you'll see that the bulls take over, and then the bears try to defend, maybe a little bit of gray, slight red before the bulls take over and resume the trend. So 2-minute, you'll see a little bit more noise. And today inside of Raytheon, no noise at all, which gives you an idea of the strength, along with how crucial it is, or how easy rather, the trade can be if you trade alongside the trend instead of against it. So there you have it, a very simple way, in my opinion, a more effective way compared to moving averages to recognize trend, know exactly where you're interested in a pullback. This to me is so messy and so noisy compared to having one simple line. I know that this line is telling me what is the current market stage, how long has it been in this market stage, and where am I interested in getting long or short based on what the trend is, based off of whatever market stage you might be in. Take care, everyone. Good luck trading, and I'll see you in our next update.